Yo, what's going on YouTube? It's TakeProfitTrader here, and in this video, I'm gonna be showing you guys a special secret ICT indicator. It's not really a secret, but it's an indicator I utilize pretty much every single day to help me put on trade. It makes identifying daily bias really easy. I could literally boot up the charts 5 minutes before market open, and I swear to God, I kid you not, in probably like less than 30 seconds, we'll be able to figure out the opening range move and kind of my daily bias for the rest of the day after that. It's really useful. The great thing about it is you don't need to stick on the 4 hour, like the higher time frames, right? The 4 hour, the daily, the weekly, the month. You can literally just stick on the 1 minute or the 5 minute, and it makes things a lot easier. I'm sure some of you guys already utilize this concept or this indicator, but it just makes it a lot easier to visualize. And yeah, you guys will see in this video, so let's kind of get straight into it. All right, guys, so the indicator that I'm gonna be showing you guys today is called ICT Kill Zones and Pivots by TFO. You guys can go ahead and pause the video or slow it down, whatever you guys need to do to copy these settings. But the great thing about this is it simply just marks out the biggest swing highs and lows from both Asia and London session. And I will show you guys how I utilize this to my advantage. Two different things that helps me achieve. First, identifying where I believe the market open will target, like in terms of liquidity, as well as kind of what the move I think is going to happen after that. So I'll kind of use today's price action as a way to kind of demonstrate for you guys. I'll go over a couple different examples on how this is really useful, and you guys should be incorporating this into your trading as well. It's a really simple indicator. It's nothing crazy. It's not a secret. Yeah, it's not really a secret. That was just kind of clickbait for you guys to kind of watch the video. But yeah, let's get started. Besides for the 1200 point dump that we had today, which was kind of ridiculous, you know, like 1200 points, just another day on NASDAQ, you know. Basically, the gist of how I use this indicator to my advantage is before market opens, market open is on this candle. And how I am able to predict or use this to my advantage to predict where the opening range move when market opens is going to go is I kind of make a visual mental note in my head of what I kind of split it up into two different halves. Whatever half we are currently trading in is where I would expect us to target first, right? So for example, if we were kind of trading, let's ignore this entire price leg right here. And instead, let's pretend that we were trading somewhere right here, right? And market was about to open. Where I would expect price to target are these London lows. And why would I kind of assume that? If you guys know anything about ICT, you guys will know that liquidity is an important concept. However, there is also another thing that I want you guys to understand is there is also a difference between liquidity that happens overnight. This is time-based liquidity. This is liquidity that generated overnight price action. This happened during an overnight session, right? This is a very important level for us to target, bounce off of, or react off of. And this is basically how I determine if I want to be, you know, if I want to continue riding longs for the rest of the day, if I expect a reversal coming. It's a very important concept that I want you guys to understand. And basically this indicator, you know, shows you guys the overnight swing highs and swing lows. With that being said, I make a mental note in my head of what half we are currently trading in, right? So for this London session, right, obviously we're kind of trading on the upper half of this London session. So I would expect us to kind of push towards these London highs. But you guys should not be basing trades or framing trades based off of that, right? You should be supplementing it with your actual analysis from, you know, ICT. So would it make sense? I always ask myself, does this indicator kind of line up with what I currently see as an ICT trader or whatever, right? So like I said, market open is around right here. Before we even open, would it make sense? So we've already identified we are on the upper half, and it would make sense for us to push towards these London highs, right? Simple. Now, I ask myself this, would it make sense for us to push? Do we have liquidity to target? Do we have an entry? Do we have, like, why would longs make sense in this scenario? My answer to you guys would be yes. Why would it make sense? Well, first of all, we've been generating liquidity to the upside. And so if market opens, we have targets to aim for. We have a lot of fuel to kind of go towards these levels, right? So as you guys can see, we have swing highs, right? We have relatively equal swing highs. We have like low resistance liquidity as well. We have the London session high, like I was talking about. And we have relatively double equal highs on Asia. So it would make sense for a push. So as you guys can see, as market opens, we get a nice strong candle closure right here. And then we kind of start wicking. We start playing around a little bit. But the important thing is, you know, we start holding these fair value gaps, right? We start inversing bearish fair value gaps, and we start pushing to the upside, right? So we kind of hold this bullish fair value gap, and we kind of inverse these fair value gaps. So boom, you're able to predict the opening range move. There you go. Congratulations. Straight to London. We have a bit of a reaction after taking these London highs, start selling off. However, we still end up holding this level. So that's basically telling me, okay, maybe instead of having a reversal to go lower, maybe we want to hold this level and potentially go even higher for Asia highs, right? So that's kind of what we do, and we start pushing towards Asia highs, take it, and we kind of start, you know, playing around a little bit here and finally get an inversion. The reason why I did take a trade over here. However, that's not what I want to go over. How I predict the move after that is I basically identify if we continue to start pushing past these Asia highs, I would basically start being bullish. I would form bullish narratives or bullish biases for the rest of the day. I would expect price to continue pushing. However, that's not what we really got. We started holding this inversion right here. So I was thinking if we were to reverse to the downside, so if we after taking this Asia high and we started to reverse to the downside, I would probably expect shorts. However, instead of that happening, we kind of held this fair value gap and started pushing, right? So we opened up this new fair value gap right here. So I was kind of wanting to see how we would react off of this level. As you guys can see, we got a super disgusting inversion right here. A lot of momentum through, and it just immediately started selling off, right? So at this point in time, I came to the conclusion that, okay, after taking these overnight highs, after taking these overnight session highs from Asia and London, we've kind of refused to continue pumping, right? So that's giving me an idea that maybe we want a reversal to the downside. Would it make sense for a reversal to the downside? Do we have liquidity? Well, of course we do. We kind of left this opening range move right here. We have liquidity right here. We kind of been generating high resistance liquidity. We have London lows, and we have all these lows over here. It would make sense for shorts, and that's basically kind of what ended up happening. We got, you guys could either take this inversion right here to ride it to the downside, target these London lows, or wait for better confirmation after we kind of inverse this one, take this instead, and whatever fair value app you guys want to use. But as you guys can see, we start respecting bearish PD arrays and disrespecting bullish PD arrays, right? So as you guys can see right here, we start holding this right here, bearish fair value gap, tap into it, super strong rejection, and that we just continue to sell off and eventually just kind of take these London lows. All right, so now let's go into the second example. This is from yesterday. Like I said, you use this as a way to supplement your ICT concepts and everything you guys already learned from ICT, right? It's not a reason for why you should take a trade. It's there to help supplement and give you more confluences and conviction for a trade. So in this example, we're obviously trading on kind of the upper half. So honestly, I was expecting longs at this point. Obviously, it should never be a reason why you take a trade. As you guys see, we're trading on the upper half. So what was my normal reaction? I would expect longs, right? Would longs make sense? Of course. Longs look good. We have, we've been leaving liquidity behind right here. We have targets. We have low resistance liquidity right here. We have right here. We also have this Asia high. It would make sense for a push. However, we didn't quite get it. And basically, as soon as market opens, we try to push, and instead what ends up happening is we start sweeping liquidity and start rejecting heavy. So this is a point in which once we start inversing to the downside right here, and maybe we get an inversion on, I believe on the 5 minute, I saw a trade idea from yesterday. If you guys look at the 5 minute right here, like an inversion setup on the 5 minute. So once we close below, honestly, even this inversion right here, as soon as we close below, I was like, this is a potential short opportunity once we close below this candle right here. Because we did not want to continue pushing towards this London high. So we did not want to continue pushing towards this London high. So what's my next liquidity that I would be targeting? Well, it'd be this London low that was mapped out. Would it make sense for shorts? Yeah, of course it does. It makes sense now for shorts. Why? Because now we start sweeping liquidity up here, right? We have a lot of targets to the downside. We have liquidity right here, liquidity right here, liquidity right here, liquidity right here. And we just got an inversion on the 5 minute, right? So now we just got an inversion on the 5 minute. You guys could have taken a potential trade riding into these lows. Second of all, right? This is the second use of the indicator, right? The overnight session indicators, right? The session indicators. I always ask myself, there's one of two reactions that you will oftentimes see after taking out one of these highs or lows. Using this indicator, right? Oftentimes, once we sweep these London lows, right? After sweeping these London lows, you will oftentimes see a big reaction, an instantaneous reaction back to the upside. From that point on, I would start framing trades to the upside. I would start looking for reversals back to the upside. However, The second scenario is what ended up happening in this case, right? Is if we start selling back down aggressively and we start breaking past this level. You could think of these levels, overnight sessions, as a support and resistance level. As ICT traders, we don't like thinking of it as, you know, support and resistance, right? However, I just want you guys to understand, if we break past these London levels, I would expect lower, right? If we start selling off past these levels, that means we want lower prices. Our objective on London is done, and we did not want to reverse. What that means is we want lower prices. So in this scenario, and I will say, I did take a trade. I did take a long in this scenario because, like I said, I was expecting longs. I said, initially, I took a long right here, and I actually went break even. I did scale out a little bit. This was my trade. You guys could have also had an entry like this and done something like this after this inversion. I did take two partials, but this was originally looking like a good long opportunity. If I were to replay this for you guys, I said it's not an instantaneous reaction, but it's a very strong momentum through this inversion. So I was very confident that we would, you know, eventually have a reversal back to the upside. So once we got this candle, you guys could have entered, and, you know, break even was almost instant, I believe, after this next candle right here. Okay, maybe not. We got break even right here, and then, you know, our stops went break even, and we started selling off. From this point, I was like, oh, what the heck, right? We're not getting a reversal. How come? So I was wanting to see how we would react after this inversion right here. Can I just draw it out, please? Thank you. And I was drawing myself two scenarios. I was like, okay, this is my last line of defense for longs. If we don't push right here and get a reaction off of, I would start looking for shorts, right? Because if we start selling past this London low, which is acting as our support, right? And we're not going to hold, I would expect even lower prices. Would it make sense for lower prices? You always ask yourself that. And I would say, yes, we have liquidity to the downside. We've just been pumping. Maybe we want to rebalance this entire price leg, right? We want to rebalance this entire price leg, maybe back to discount. So, you know, we're going to probably aim for like the 50% right here. So I was looking at that, and I was starting to frame ideas for shorts. By this time, I was already done trading. But as you guys can see, we start breaking past below here. You guys could have found a potential entry in right here, done something like this, gone break even at this swing low right here, and then try to hold. Obviously, it gets back tagged break even. But you guys understand, now the narrative is bearish. And then I'll show you guys another example. All right, now for this other example, this is going to be Wednesday, I believe. Yeah, so this is going to be Wednesday. And let's just draw out our imaginary. Obviously, you don't have to draw it out every single time. I always just make a mental note of what upper half or lower half we are currently trading in at that current point in time before market opens. So market open is on this candle right here. You guys ask yourself, what upper half or bottom half are we currently trading in? And it's pretty obvious, right? We're in the upper half right here. Would it make sense for longs, right? Because at the end of the day, this is just an indicator that's there to help supplement your ICT and give you more conviction. It is not a reason why you take a trade. I'm going to repeat that. But it would make sense for longs. We have liquidity here, liquidity right here, and liquidity right here. It would make sense for longs and liquidity right here. So I would expect market to open. Because we're on the upper half, I would expect us to shoot towards this London high. And then from there, I could frame either a continuation trade to the upside or a reversal play, right? So this is giving you two different trade opportunities. First is to ride your trade into that overnight session, swing high or swing low. And then the second is to play the reaction off of the overnight session, right? It's giving you two different trade opportunities. So as soon as market opens, do we have some sort of reason to go long? Well, first of all, we swept this internal liquidity of, yeah. We also started forming inversions right here. And this could have been a potential trade right here. Honestly, I don't like trading at the open, but it gives you an opportunity. I do it sometimes, and I have really high success rate. It's probably close to 80%. Allegedly, you know, I'm not gonna, don't sue me, you know, but like, as you guys can see, we get an inversion right here, swept liquidity, had liquidity to the upside to target still, and from there, honestly, go break even, whatever you need to do. And then from there, this is where I start framing either a continuation trade or a reversal trade, right? So now I see the reaction. I was like, okay, we got this fair value up right here. I give myself two different scenarios. If we close below here, I could potentially see a reversal back to the downside. Would it make sense for a reversal back to the downside? And my answer to you would be yes. We have the swing low, relatively equal swing lows. We have like high resistance liquidity right here, right? We have the London lows as well as the Asia lows. So we got stacked overnight lows as well as all these lows over here. If we do get a trade to the downside, I wouldn't be against it. But that's not what ended up happening, right? You always play the reaction off of, right? You don't play your emotions. You don't play the prediction. You play the reaction. You play what you literally just play what you see, right? So honestly, a potential trade idea for shorts, if we got it, was maybe wait for this inversion. Obviously, we never got it. We never got confirmation. So you don't take the trade. And instead, what ended up happening was we started getting a continuation to the upside. And as you guys see, we start holding this fair value gap right here and start pushing to the upside. Now I start asking myself, does it make sense for longs? And I would say, yeah. We also have this super huge range that from, I think, the previous day. So maybe we're wanting to rebalance back to discount 50% right here. So maybe we still want to push, right? It would make sense for longs. But at the same time, we use it as a support level, right? Or a resistance level. If we start continuing to push past these London highs, I would expect higher prices. Why? Because we've already completed our overnight objective. From there, if we refuse to start selling down immediately and start having a reversal back to the downside, I would expect higher prices because we're not satisfied. The market is not satisfied with just London highs, right? So, we start holding this fair value up and start pushing to the upside. The reason why this honestly was a bit of a sketchy trade for shorts, honestly, it could have worked. I could see how people could have been faked out, like with this trade right here potentially, right? Riding it down to the downside. But the reason why I don't like this is because look at how aggressive this one candle is. I don't want to nitpick, but this is like, if you guys know how I trade, this is literally how I trade. Not one time in this entire price leg was it kind of really screaming shorts. You guys can see we're kind of holding this inversion right here as well as this inversion right here. Honestly, the reason why I don't really like shorts, I probably would have only taken shorts if we were able to kind of close below this inversion right here, right? Because this would have given me a lot more confidence because we don't have any more bullish PD arrays to hold and push to the upside, right? So once we close below here, that would have been your confirmation to go short. However, this one here was a little bit risky, and you see how big and expansive this one candle is. This is telling me we probably are more aggressive on the buyer side, and as you guys can see, we're kind of a little bit hesitant on the selling side, right? A little bit. This one candle took 3 or 4 bearish candles to make, essentially, right? To basically recoup. So from that point on, I would be still looking for longs, and as you guys can see, we start buying back up and got an inversion back to the upside. So this could have been a potential long entry, and you guys could have rode a continuation back to the upside, you know, as you guys can see. And then I'll show you guys one last example. All right, guys, so now let's go ahead and take a look at the last example. This one's a bit of a unique case, but as you guys can see, you could also utilize this during Asia, right? So if you guys are trading London session, if after sweeping this Asia high and we start pumping to the upside, and we refuse to sell back down immediately after sweeping these Asia highs, you could expect higher prices. Guess what happened? After sweeping these Asia highs, right, London refused to sell back down, and we continue to push, right? So this is how you guys could use overnight sessions to your advantage, right? So New York Open is right here, and like I said, this is a bit of a unique scenario. But what upper half are we on currently? We are currently trading in the upper half of this London session, right? So what is my automatic reaction? I would expect for us to kind of re-push towards this London high, and then from there, if we get a continuation, I'll take a continuation trade. If we get a reversal immediately, then I would take a reversal trade. Would it make sense for shorts? Sure, we have a lot of liquidity to the downside, as well as stacked overnight session lows, so it does make sense for both directions. However, I would like to see the first scenario play out first, and then from there figure out what I want to do. Like I said, though, this is a different and a unique case, and the reason why this doesn't work out is I want to stress this to you guys. This is not a reason why you guys take a trade. It's there to help you frame your trades, supplement your trades, right? And so guess what, we try to push right here initially and start closing back down, and we just start chopping for the entire session. We do eventually start closing strong right here, and honestly, this looked like a good long opportunity at the moment in time. However, if you guys know me and my trading, I would have never taken this trade, or at least I would have been able to avoid this trade, even though it looks good for longs, right? Is because I wait for I wait a second or two after the new candle forms to see if we continue to push towards this level to really advocate for a higher. If I don't see that and see continuation to the upside and we start selling back down immediately, then I skip on the trade. So basically my new condition is if we flip back bullish, then I would enter the trade. As you guys can see though, that never ended up happening, and we get an inversion instead to the downside. Now I'm asking myself, wait, does it make sense for longs, right? Even because, we're on the upper half of this London high. We're in the upper half of this London overnight session. I would be expecting for this London high to get taken before I frame a reversal, right? However, is that what price is kind of giving me, or showing its hand to me at the moment? No, we kind of swept this liquidity right here, and we started selling back down super aggressively, even after we inverse this fair value gap, right? Even after we inverse this fair value gap, we barely just swept this liquidity and just started selling back down aggressively to the downside. So at this point, I'm like, okay, is this a potential play to the downside now? And honestly, this could have been a potential entry for you guys. Honestly, I wouldn't have entered right here. I probably would have entered on this candle instead. Like I said, because I wait for this candle to have a continuation, right? After this candle closes, I wait to see for continuation. We never got continuation. Instead, we started reversing back up here. So I would have waited for maybe this candle to flip right here and then taken a trade short. So a potential trade could have looked something like this, right? And gone break even after taking these internal lows. And then boom. This would have been a decent play, although, it eventually does get tagged break even. But this was a really choppy session, so I wasn't expecting much. Eventually, we do get a move to the downside. However, at this point in time, you just have to kind of abandon the idea for longs, because what is being respected, what is being disrespected? Obviously, we're disrespecting a lot of bullish PD arrays. And just respecting a lot of bearish PD arrays, right? We start getting inversions to the downside, so you guys could have played that inversion. So once we start trading back towards this like lower half of the inversion, or sorry, lower half of the session right here, I would have started framing trades for shorts. And like I said, I would always ask myself, does it make sense for shorts to happen? And my answer to you would be yes. We have liquidity right here. We have high resistance liquidity right here. We have, like I said, stacked Asia lows, overnight session lows. It would make sense. And from that point on, now we have your second trade idea, right? Is what happens at these lows? Do we get an instant reversal back to the upside, or do we get a continuation short? And guess what happens? We don't get an instantaneous reaction at all. We don't even inverse any of these fair value gaps really at all. And instead of like getting inversion back to the upside with a lot of momentum, possibly a V-shaped recovery, we start selling back down and kind of holding this level. So from there, I would be like, okay, this is not holding. We're not going to get a potential reversal. Does it still make sense for shorts? And I would say yes. We have a liquidity over here. We have overnight sessions from yesterday that we could be targeting. We have this volume imbalance that we need to fill in. I would be saying I'd be honestly looking for shorts, and eventually we do continue to start selling off, and that's the daily bias for the rest of the day, right? We get just short and we start chopping around after that. So I hope this video kind of gives you guys a little bit new insight. It's a very simple ICT indicator that just basically marks out the overnight session highs and lows, but it is a super important concept that you guys need to understand. We really like to target these overnight levels, and you guys could frame a couple different trades. You could, first of all, ride the trade into those overnight highs or lows, as well as framing your second trade idea is if we continue to push past these levels, you could either take a continuation trade, or if we react and start selling back down, you guys take a reversal. It's very useful. It's a very simple indicator. It's not going to clog up your chart. It's right on your screen. And I don't honestly know why a lot of people aren't using this. I'm sure a lot of ICT traders do use this concept, although it's not mapped out for them. They will just mark it out personally. And some of you guys won't even realize that you guys are kind of utilizing these overnight session. Like, you'll just mark out these swing highs and swing lows and not understand why we're reacting off of those levels, right? So I just wanted to give you guys a video. This is a really important video for you guys to watch. Make sure you keep watching it over to understand. Backtest it for yourself. Use my settings. And kind of just backtest for yourself, right? We'll just kind of go over a couple different examples, right? Look at this example right here, right? What upper half or bottom half are we currently trading in before market opens? 9:30 happens around right here. somewhere right here, and I would expect for London highs to get taken, right? Obviously, we don't get that opening move. However, we start selling back down. And then from here, I would be looking for shorts, but we never got that, right? We never got shorts to the downside. Instead, we start reversing back up. And look, as soon as we take these London highs, we get a reversal play back down, right? What happens over here? Look at what happens over here. What upper half or lower half are we currently trading in? London, our market opens around the right here on the lower half, right? So market open happens around right here. It's on the lower half of this little overnight session, right? So I would expect London lows to get taken. Guess what happens? We got London lows taken right here. From there, we start selling past London lows. What happens after we take these Asia lows? We get a reversal back to the upside, right? So now you guys can see how you guys can start framing trades. Look at, after sweeping these Asia lows, we get a reversal back to the upside. So just do a lot of your back testing. It's a really helpful indicator that I hope you guys start using a lot more of. I literally swear to you, I can look up, I will boot up the markets 5 minutes, 3 minutes before market open, look at the charts for like half a second. I swear to God to you, and I will be able to kind of understand where I want the opening range move to go. And then from there, once we get that move, I will see how we react off of these levels. If we get a continuation higher, I will be bullish. If we get a reversal back down, I will be bearish. It's as simple as that. My trading is very simple. It just utilizes these overnight sessions. And yeah, I hope this video is helpful. Before I go ahead and let you guys go, make sure you guys go join my Discord. It's free. I'm not going to charge you guys. When you guys do first join, make sure you guys click this green check mark so you guys can view all the different channels. I'm pretty much live every single day on YouTube, so you guys make sure you guys go ahead and tune in for the live stream. We've had a W every single day this week, so that's pretty cool. As well as make sure you guys use Monk on both Apex, Tradeify, MyFunded Futures. Use code Monk. That's Monk with 2 Ks. Apex currently is 80% off, $85 activation fee, so it's about to end this next week on October 16th, so make sure you guys get that. As well as, check out MyFunded Futures' Scale Flex plan. It's free. It's a free add-on. Use code Monk, right? And yeah, I hope this video helps you guys. If you guys are new to trading, I also have a little trading roadmap for you guys on the Discord. It's free. I'm not going to charge you guys. If you guys don't know how to get started, it's everything you guys need to know. My personal video recommendation, all the playlists that you guys could choose from, video concepts that you guys need to understand to master, in my opinion, right? As well as some supplementary stuff like SMTs or whatnot. Obviously, I feel like I'm gonna make a couple of different videos moving forward in the future. But yeah, what futures are. If you guys currently trade with Forex instead, this is a little section for you guys, as well as prop firms. You never traded prop firms before, and as well as some psychology videos. So yeah, I hope this is a helpful video for you guys. Good luck on your trading. I will see you guys in the next video. Peace, peace.